Hello everyone, can you hear me? It's not too loud or too soft. Can someone tell me? Excellent, excellent. My $6 microphone works. And you can see my screen and Fatso the fat-ass wombat. Let's just see what... Alright, I'll tell everyone to join. Yeah, so I have done no preparation for this. I've bought a microphone, I've fucked around a bit with the streaming thing, and it seems like it's all working. So the plan is to go through how to make or how to develop a system. And it's actually quite easy. Getting it to work is a bit harder. But we might get one to work today. I don't know. We'll grab some indicators, throw them on a chart, and we'll find out if it works or not. If it doesn't work, then we'll know that too, and that means that we can cross some settings off our list and try something else next time. So I'll try to keep up to speed with the chat, but as I pull up different screens in the broker screen to test, I might lose the chat, so I'll pop back sort of every time I've finished making a point to pick up any questions or things. But first off, I want to just run through basically what we're going to do and the process, so that way then anyone who's just watching the show can get the idea of it nice and quick early on, and then if they couldn't be fucked watching the rest of it, they don't have to, they can just turn it off. Sound good? Yeah, alright, I'll jump back in, I'll post on that thread, and then we'll kick it off. I'm assuming everyone can still hear me. Great. Okay, let's find this thread. Go through here maybe. Australian internet, so slow. Where are we? Here we are. Yeah, there'll be and there's a delay anyway between what I'm seeing and what you guys see anyway, so what was I doing? Getting to my link. And then posting it in here. Alright, let's kick this off. Alright, so So we have two parts to any system: what the system is and how it's going to be used. I have 4 simple points for each one. So we'll start with, actually we'll start back to front. We'll go how to trade. Now you probably may have seen me post this on the forum. I have four points. So we'll just go through this first. We'll grab that and we'll put it over on this thing. So we have don't want to be how to trade. So let's assume we're going to go long. So whatever the rules are, doesn't matter what they are, we've decided that they're met and we enter along. Now almost immediately after you've entered your position, the indicators are going to change, and it's not going to be all your setup is not going to be there anymore. So you move from number 1 to number 2. So you're in the I don't want to be short position. So basically, if you don't want to be short, you want to be long. Different sides of the same coin. And so we sit in the number 2 position, and hopefully the market goes in our way and it's going up, and we still don't want to be short. We still don't want to be short because we think it's going to go up more. So we don't want to be short, goes up more. And then at some point, we're going to think this run that we're on has been exhausted, and we decide that we don't want to be long anymore. Now we are long because we took a position, so as soon as we decide we don't want to be long, that's when we shut it, and then we wait until either number 1 or number 4 occurs, and our rules will tell us this, and the next time it might be a short position that presents itself. So we take our short position, and then we work backwards from 4-3-2 down to 1. Or not to 1, but 4-3-2. So we take our position, and then we wait. And we don't want to be long, because hopefully we've got it pretty close to right, and it starts going down in our short position like we thought. It's going down, we don't want to be long, so we stay. We don't want to be long, i.e. we want to keep staying in this short, and then at some point we'll decide, judging by the rules of our system and the indicators, that now we don't want to be short, so we close it, hopefully take our bags of money, go buy cocaine and hookers. Then we wait again. We wait for either number 1 to occur or number 4 to occur, and we work towards the end. So did I explain that relatively okay? The thing to grab from this is that we're not using a set take profit or a stop loss. We're going to enter it, and we're going to wait until we've decided that we don't want to be in this position anymore. So we haven't said this is where we're going to, or this is where we're going to stop. We're wanting to get in, and hopefully we found a nice entry and we can just wait for a big long ride. Okay, so then we have, how do we actually do this? Or more to the point, what to use. So what we want to do is get a story. So the story is, where is the market at the moment? And I said that there's 4 ingredients for this story. Your first one is a trend or a trend indicator. The second is a momentum. Third is volatility. and fourth is support and resistance. So what we want to do is grab an indicator from each of these particular types, or indicators that describe each of these market peculiarities. So we want trend, because that will tell us the direction of the market. We want momentum, because that will tell us the state of the market, or how sort of how much energy it's got and in which direction that energy is going. Then we'll have the volatility, so we know whether the market is asleep or awake. And then lastly, we want support and resistance, because ideally we'd like to enter just above support and exit at sort of a resistance point. Of course, everything doesn't always go to plan, but if you can get each one of those four indicators telling its story, then you get a snapshot of the market. So we want the trend, and we can look at it and say the trend is up, down, sideways, strongly up, strongly down, looks like it's going to reverse, all those kind of things. Momentum, we can look at it and say there's been overbought or oversold is the classic momentum one. So there's been a lot of buying recently, and maybe the market's going to come off a bit. Volatility, so it could be the Asian session, not much is happening. So if your volatility is really low and your rules might say to take a buy, but that's because the market is all compressed, and the reason why your indicators are being hit is because the whole market is compacted, so you could get false signals. So if the volatility is low, you can say, well, I'm just going to ignore the signals at the moment until there's sort of some movement in this market. And then lastly, support and resistance. We all know that at certain points in the market, it's likely that the buyers might come in, and of course, as well as buyers, you have people exiting positions. So we're looking at for those points where there might be activity in the market that could reverse the directions. So that is what we're going to do. So is everyone sort of cool on the idea of how we're going to use these four indicators to explain the market? And then we're going to use those indicators to keep looking at the market until we find our trade, either a long or a short. And then we're going to keep looking at the same indicators as the market and the trade progresses to decide, do we want to stay in this position or do we want to exit it? And then we'll stay in until the point comes that we're pretty sure that the direction that we picked is finished. Great. Hopefully I'm being pretty clear. So I'm going to have a sip of tea and a vape, and then we will get into the actual trading program. Did you hear that slurp? It's bloody delicious. Just check in here quick. Oh, there's itchy. An itchy graph. We're gonna have to love itchy graph. I think we'll have to use that. Just for squatter. I don't know if squatter's in the room, but too old. Too old, far too old. I can remember a time before computers when you went to the library and you had to look up books on index cards. Mind you, it was in primary school, but I can still remember it. So I'm old enough to remember that, but not too old enough to forget it. Alright, so I use MT4 because I'm old. There's lots of things wrong with it, but it works as well. And good old familiarity. So what we've got is, I literally installed this morning to use on this. So everything off here to the side is default. We got indicators, the various things that come with it. Now, one thing that will be useful for you if you use MT4 is FX Blue's Trading Simulator. So that's the web page there. You have to actually sign up for these blokes, probably because like they want to feed you ads and get you connected to their thing. So when you do the manual back testing and you finish off, it wants to upload it to their site so you can look at all their statistics and whatnot. I've had dealings with the guy that runs this site, and he's a upstanding dude. So I imagine, without fully knowing, that if your internet security has a SPAC attack with the program, it's because it's uploading files that's being created through MT4 up to their site so that it can analyze it. But basically you run it like an expert advisor, for those of you that know MT4, and it visually puts up the screen. But we'll see that as we go through. But that's the program that I'm going to use to manually backtest it. So we will grab the euro, because that's always a good one, and an hour. So unless you've got a good reason otherwise, an hour is a good time frame. I'm always of the opinion that lower than an hour you're getting a lot of noise in the chart. So that's an hour. We can see it's trended down and then it's trended back up. We go down to 5 minutes, and while it's still trending up and down, we're getting a lot more noise in amongst it all. And then plus, where's my document here? You've got your edge. So your edge is sort of how much money you make, how ahead of the market you are. So if, for example, you're scalping and you're going to scalp, say, 5 pip take profit, and you're successful. However, for every 5 pip take profit, you are going to have at least 1 pip transaction cost. So 1/5 equals 20%. So you're having to get at least, your edge is going to have to at least be over 20% to pay for your transaction costs in scalping. However, say our take profit is 50 pips and a 1 pip transaction cost. So 1 divided by 50 equals 2% lost edge. So scalping, you're going to have to be a lot better to maintain, be in front of the market when you consider that you're going to lose 20% of your edge to transaction cost off the bat before you even start. 50 pip take profit, you're going to lose 2%. So a very small amount of the edge is going to be lost to transaction costs. Plus, you can slow everything down and have a think about it, because really that's what you want to do. You want to have a bit of a think. Like, you rush in like a bull at a gate, you'll end up fucking it up, taking trades that you shouldn't, thinking that, oh, I need to act now, or oh, I missed that entry signal because I went and took a piss. I need to take the position. You take it, you're in too late, you're losing even more of your edge. There's just lots of things that you need to overcome to scalp. It's not saying it's impossible, it's just more difficult. Whereas longer term trading, you can think, oh, this has hit my rules. Now, should I take this? Let me look up Forex Factory and see the news. Yeah, there's no news coming up. No news listed down the side. This is on the, say for example, the pound US. I might just flick over and see what the pound, the euro pound's doing, the euro dollar, the Australian dollar against the United States. Check your stock markets. Do whatever you want to do to just be at ease with that the market's behaving as you think it should. Then you can take your trade. There's no sort of mad rush that if I delay my entry 2 minutes, I'm going to miss out. So you can do everything a lot more calmer, and you don't have to worry about missing out, because no one likes the fear of missing out. Exactly as well, David. The more you trade, the more mistakes you can make. Now, when we do, which we're about to do, the system, and hopefully it works, you find out how often these rules come up. And I'm an algo trader, not a manual trader, but I go through this same process. You'll be surprised how few trades good traders actually take. The other thing with good traders is the first thing they worry about is losing. If you don't lose, then a few things happen. You become more confident in your trades. So when the setup's there, even if you're thinking, oh, I'm not sure if this is right, you get confident in your trade because you know that you only pick good ones, or your system does. So you can take trades, you don't second guess yourself. You don't think, oh, is this a good trade, is it not? You just say, yep, boom, rules met, go. And if it's automated, the robot does it for you. You also have confidence when you're in the trade itself, just to let it go. You might see a little correction, but you're cool. You know that when you went through it with the rules, that these things happen, and it's best just to let it flow, because after this little correction, it'll go up again, or down, depending on which direction you're in. And I've lost my train of thought on the point I was making, but I'm sure it was a good one. Anyway, let's throw some indicators at this baby. So, number one, trend. Trends up here. Let's throw on, they've got Bollinger Bands in the trend, but I'd like to use the Bollinger Band as a volume indicator, or a bit of both. We said we were going to use Itchy, so let's throw the Itchy on. These are the default settings, I think 92652, I'm pretty sure it is. So boom, and that's far too messy. So there's lots of stuff on this. Itchy's actually like a 3 or 4 indicator at once. We have, let's zoom it in so that you can see it a little bit better. We've actually got this cloud bit that's, I guess, support and resistance. And then we've got the green line is probably what you might call an exit line. And then these middle ones are calculated differently, but they're similar to moving averages. So what we're going to do is get rid of lots of this noise and cut it back. So you can do this with indicators. We're wanting the trend, so we're going to remove all the other crap from it. How are we going to do that? Right click, indicator lists, edit. I think I might have this up. Anyway, colors. So we want to get rid of, whoa, I'm changing all this, reset. Get rid of this, none, none, none. Boom, that's better. Okay, we'll just make it a little bit thicker now, so that I can see, being old man. How do I get thickness? There's thickness. Alright, so what these do is find the actually let's look it up so I don't bullshit you. How do you spell it? Ichimoku. Here we are, Ichimoku. And if you're looking up indicators, this website is good. Stock charts. They do talk about the indicators. Come on, Australian internet. Streaming and trying to look up the internet at once. Do not like. So this site uses stock market examples, but pretty much all of them are the same. So these are the two ones we're looking at, is this conversion line and the baseline. The baseline is the blue line because it's the slower moving one, and the conversion line is the red line. And they measure 9 period high plus 9 period low divided by 2. So basically the average. So they're looking at the average of the last 9 periods. And then the other one is doing 26. 26 period high plus 26 period low divided by 2. So it's getting the high and the low. So actually I told a lie there, it's not the average, it's the period high and the period low. So it's finding that point down the bottom and then 9 in front, whatever that high is. It could be here, I can't count, 1, 2, 3, 4, 5, 6, 7, 8, 9. So it's at this point here, the red line is being measured from there to there, from the high and the low. And then the blue one is the same except longer. So it's looking for the highest point and the lowest point in the past, and then finding the middle. So because the red line is shorter, it's going to react quicker, and the blue line reacts slower. So when the red line is above the blue line, it means that we're getting higher highs and lower lows. And then when it's below, so there's a below, here's a below, we're getting lower lows and lower highs. So that's the two middle points of the itchy bar, and that's going to be our trend indicator, because it tells us, is the market going up or is it going down? If the red's below the blue, it's going down. If the red is above the blue, it's going up. Alright, so next up is momentum. What are we going to use for momentum here? Oscillators. What do we got? Let's use a stochastic. Alright, so this one, the period in it is, I'll just bring it up again so you saw. We've got a K period of 36, a D period of 9, and a slowing of 9. And the calculation method is exponential. Again, you can look up stock charts to see what all this means. So we'll go over to the stock chart, because it's important as well that you understand what these indicators are saying. If you don't understand what the indicator is saying, you're just sort of just following random lines on a chart. You have to sort of comprehend what the fuck's going on. So stock charts, what are we using? Stochastic oscillator. Alright, so this one is using current close minus lowest low divided by highest high minus lowest low for the K, and then the D is the 3-day moving average of the thing. So the D is smoothing it out, which I think is the red line that we see on the chart here, and the K is the blue line. So what it's going to measure Alright, so if the current close is rising, it's going to get higher values towards the 100, because the current close is going to be high and the lowest low is going to be further away because the current close is rising, so it's getting further away from the lowest low. And then because we're dividing it by the highest high to the lowest low, if the current close is close to the current high, we're also going to get close to 100. So as we get closer and closer to 100, it means that we keep hitting higher highs, or very close to highest highs, and our lowest low is getting further and further in the past. So that's why it's called an oscillator, because markets, especially in Forex, will swing up and down as everybody buys in, they get profit, they start to sell out, there's a point of resistance, so they're selling out, other people are seeing the resistance, seeing the market turn, they sell in, so you've got people exiting, people joining, and they switch the market. So we'll come back and we'll look at this indicator now. So again, it's important that when you put an indicator on the chart, you're knowing what it's saying, because otherwise it's just, who the fuck knows, it's just a line on the chart. And until you understand what it's telling you about the market, you're just trading random patterns. I mean, next you'll be telling me that tea leaves can predict the future, so they've got to mean something. So we have a look here. Let's zoom it out a bit to get a bit more of a look at the market. So we can see as the market is coming down in this center part here, so does the stochastic, and it tells us that we're making lower lows and the highs is not keeping up with our lower lows, and then there's a run up and it shoots all the way up. So notice that the distance that we dropped is a lot more than the distance that we gained here, but the oscillator has come back to almost the same point. So the oscillator itself doesn't predict sort of the size of the move. It just says that, hey, the market is putting in a lot of effort into the sells here, so there's a lot of selling happening, and then it comes up again and there's been some buys. So now we're starting to see a story sort of being told here. So we have at this point here, so let's see if we can highlight it somehow. How do we draw on this piece of shit? I don't fucking know. We can always do this. Now we can draw. Where's my pen? Here we are. So we've got this point here where the trend has changed from up to down, and then we got this point here at a high. So we can kind of start thinking, well, the trend has changed from up to down, and at the moment the market's put in a lot of effort into the buying before it. So we assume that if it's high, now the next thing it's going to do is go down. So we've got up here saying that there's going to be a turn and it's going to go down, and we got here saying that chances are it's going to go down, and of course we can see into the future and we know that happens. So far so good, we got a little bit of a story happening. Yep, fuck off. Next up, we're going to use volatility. I like Bollinger Bands. because why not? So again, this is the standard Bollinger Band. On it goes. Let's bring it up. Again, we'll make that a bit thicker so you can see it. Whoa, how crazy is this looking? Let's calm that the fuck down a bit. Bollinger Bands, calm the fuck down. That's a bit better. Alright, now we're starting to get a bit obscured here, so what we'll do is we'll come in here and we'll just make sure the chart's in the foreground to make sure that the bars are in front of the lines. Let's... Now, ideally I think I'd like to take that middle one out of the Bollinger Band, but we're cool. So, Bollinger Bands, simple. Moving average is the middle one, and then one standard deviation above and below. Statistics, standard deviations. I mean, I don't know how many of you paid attention to statistics in school. Probably not, because it's like fucking boring as shit. But you have your standard bell curve, which is meant to be symmetrical, but I can't draw. And then you have one standard deviation either side. Whoa, how's that D? And then in this part in here is, what is it, 70 odd % of the value. So if we assume that the market is randomly distributed in a bell curve, which you can argue it is, you can argue it isn't, but we don't fucking care. If the price is within the upper and lower standard deviations, then it's acting normally. If it goes outside of the bands, then something's up. You might say that if it's gone above, that a nice solid push to the upside is occurring. So we can see here something's happening, here something's happening. Could say there's something happening, although it didn't close below there. But again, through here something's happening. Again, here, 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 there. So you can see that sometimes we get false signals. Sometimes we're sort of getting not very good, but it's not a bad signal. Here, this one especially, that's bad. But what we can notice here is that it didn't close below. So we'll remember that for our rules that we're about to develop. Closed above there. Alright, so now we're starting to get our system going. Now the last one is support and resistance. When we make our trade, we'll pay attention to these for mostly our exits and where we're going to put our initial stop loss. So, rule time. We might be losing video quality sometimes because of crap Aussie internet. So I apologize for that, but we're all about the process. So hopefully you can follow the process that I'm doing and then just replicate it yourself. So let's make these rules. We'll just pick a random place on the chart and start to have a look at these rules. Let's have a random... Oh, they're looking a bit crazy. Let's zoom out. That's my problem. Alright, now we can see what the fuck's going on. Alright, let's have a look. I'll grab a screenshot. Now, we've already had to think about it, so what we're going to do is we're going to look for when we think momentum has been exhausted. So there's exhausted momentum there. Oh, what the hell? Hey, now I've deleted it. Bring it back. Nope, can't bring it back. Hey, all terrible. Alright, so we'll put this in the middle, and then we'll circle the exhausted momentum parts. Oh no, how do I make that clear? This is all just not going good. Fill color. I turn it off. Oh, shit. Alright. Let's fuck that off. Let's get the pen. So we've got exhausted momentum here. Down here. Here again, and then up here is lots of exhausted momentum through here. But clearly it wasn't exhausted because it kept going. So we can't just pay attention to one indicator, because one indicator is not going to tell us the whole story. So these are our interesting points in the momentum indicator. So let's have a look at the Bollinger Bands. Now, we said that when it breaks the Bollinger Band, that it's likely to continue on in that direction. But we saw that that doesn't often happen. So let's have a look at situations that match up with what we've already highlighted in our stochastic down the bottom here. So we found this area, and in here. So what's happening in the Bollinger Bands in these points of interest? Well, we can say that somewhere here it's broken the bottom, and somewhere here is broken the bottom. So whether we decide it has to close or just break it, I'm not sure, but we found those two. So what have we found here? That when stochastic has gone above 80 and is starting to fall, and Bollinger Bands get broken to the downside, we take a short. So let's write that down. I'll write it down up here. So we want to be short. So in stock, it's greater than 80, and Bollinger Bands broken downside. We want to be short. Now, we want the same rule for long. So when stock is less than 20 and Bollinger Bands broken upside your head. Alright. Now let's have a look at the itchy. So in this point here, our red is, it's hard to say, but it's definitely not below the blue. But here, it does become below the blue. So that keeps us out of this crap trade because of our itchy. And then somewhere in here, red gets below the blue, and we have the stock that's been above and is falling, and a hit to the bottom here, and we can enter. Let's have a look down here for all three of our rules. We've got exhaustion down here. We've got red above the blue, and okay, so we might have got into a bad trade here. Now we don't want to throw the baby out with the bathwater, but what we can notice is that it hasn't closed below that particular candle. Now I'm sorry if the detail's not there on the video, but what we're seeing there is it's popped up above, but it hasn't broken it, so we'll add that to our rules. Again, apologise for the bad resolution on the video. Please write to the Australian government and tell them to sort our fucking internet out. Alright, so we've got that, and we've got our last rule. Itchy for long, we want red greater than blue, and itchy blue greater than red, or actually we'll say it the proper way, red is less than blue. Alright, now when do we want to exit? Which is for short, we want to exit on, oh man, I'm breaking this shit. So when do we want to exit? So we'll come back and have a look at when we want to exit. Make this bigger. Oh, well. We can. Now there's a few places that we could exit. We could exit when Bollinger Band is broken. We could exit when the itchy changes over, or we could exit when momentum gets oversold or overbought. So what I'm going to suggest is we take 2 out of any 3. So we need all 3 to enter, but we only need 2 to exit. And that makes sense because we've gone from I want to be long to I don't want to be short. So I don't want to be short when 2 out of 3 entry 2 out of 3, getting myself confused. 2 out of 3. I don't want to be short when 2 out of 3 short conditions are met. And I don't want to be long when 2 out of 3 long conditions are met. So there are our rules. We enter. Come back here because it might be easy to see. Well, kill it yet. Come back here. So we enter when the stock has gone above 80 and is now falling. The red is below the blue, and the Bollinger Band is broken. We exit when 2 out of those 3 things occur in the opposite. So we've got stock below 20, that's one of them, and then we've got broken to the upside of the Bollinger Band. Alright, let's have a look if this thing actually makes any money, because it's all very well to look at this chart and hindsight is 20/20 vision, but proof is in the pudding. So let's save it. We'll call it Fatso's crappy trading plan. Now the reason I saved it is for those of you with MT4 that what we're about to do is visually backtest. So we're going to use the FX Blue thing that we had a look at before, and you basically install it on MT4 and it runs like a expert advisor, and it brings it up and you can make pretend trades on a chart in real time. So I've put pause at the start of each bar so that we can just click it through rather than it runs away from you and you end up missing trades because it goes so quick. So hopefully this is set up correctly, and I'll click go, waiting for update. Okay. Aye, happy days. Am I still waiting? What's happening? Why isn't this thing here appearing? We'll load up our crappy trading plan. Come on. Don't tell me this needs market opening to work. That would be a damn shame. I have a feeling that this training system might want ticks. Wake up. Wake up, wake up, wake up, wake up, wake up. Okay, I'm just going to restart it and see if we have any luck restarting it. Oh, hang on, I know what I might have. I mightn't have done the options in MT4. Aha, maybe that's the problem. I need my login. Shit. What the fuck's my login? See, this is why you prepare. Hey, I remembered it. How amazing. Wonders will never cease. Alright. So we can piss this off and we'll... So what we're going to do now is live trade. And hopefully... what we're going to do is this. Make it quicker. Sorry about this fuck around. I'm still not 100% convinced that that thing is going to work. Fatso's crappy plan. Oh, no, we've got an... Hey, excellent. Thank you for working for us. Alright. So here we go. Every time I click forward, it'll put a bar in. Oh. So, let's have a look at what's happening here. We have got stochastic down below. So we're looking for a buy. We're going to have to wait. So we're not getting one at the moment. We've kind of just missed a sell that we could have gotten in on if we'd started this test a little bit earlier, but we didn't. So we'll wait. So we're waiting, waiting, waiting. Okay. Oh, I thought it was going to go above. So we're still waiting. We're still waiting. Okay. Now, here we are. We've got red starting to come back up here. So it's about to go above blue. We've got our stochastic that's come down below. We've got our Bollinger Band getting close to our price. So let's see what happens if we click it forward again. Oh, I didn't quite make it. Oh, well. Oh, now what have we got? We've got our red above our blue now, but it's only just happened this bar, so let's enter. We can use a little bit of thing. So what do we? Let's just enter one lot. Like, we're not going to use money management. That can be done on another day. This is just to test if it works or not. So we're going to buy. So we've bought. Hey, look at that. I don't know whether this training thing has actually realized that we bought there. Sadly, it dropped back down. Which is a real oh no, there we go. Woo! Happy days! Still going up. Shit, eh? I might have found like the best trading method ever just by fucking around with you guys. Up it goes still, up it goes still. Alright, what have we got here? Looks like we've got an exit. Let's have a look. We've got our stochastic above. We've got a broken to the downside of the Bollinger Band. And we've got all three happening. So we're out of this. Now, I don't know what the hell this trading thing's doing, but it's not working properly. But usually you say buy, it comes up buy, it tells you the profit, and then you say close, and it goes into the strategy tester that you made this trade. but clearly that's not working. I don't know whether it's because the market's closed. So what we'll do is we'll just generally analyze the trades as they happen, and we're doing it in real time. We don't know what's going to happen in this market. So that was a successful trade. So we came in down here, and that was somewhere around 1968, and we exited that trade somewhere up at 122. So that was, fuck, I don't know. Do we have a measurement tool here? Here we are. We went from here to somewhere down here. Where was it? This one. So that's 280 pips odd that we made on that trade. I'll take that. So 280 pips, that alright for everyone for a first trade? Come on, let's get excited here. Let's get pumped up. I'll sell you my coaching course. Alright, so let's move it on now. So, have we got conditions now for a sell? We might have gone straight from a buy into a sell. Now we can use a little bit of thinking here. So we've gone above and it's falling. We've got red below blue, and we've got Bollinger broken. Now, we've just had such a good run, we might think, yeah, we can sit this one out. But for the sake of this exercise and being true to our system, we'll take it. So we entered just up here. I think we can put in a little marker. So we entered here, down, arrow here, and let's move it forward. So it's not going our way. Okay, now what have we seen here? We've got red over blue, and we've got a broken of the Bollinger Band. So 2 out of our 3 conditions have been met. So that's basically our stop loss. So you're thinking, hey, you're trading without a stop loss. No, we're just exiting when our indicators tell us to. And that's where they told us to. So we've lost, we entered here, and we exited here. So we lost 70 pips. I mean, we could have held and hoped to come back, but that's not our rules. We lost 70 pips. So let's keep a running total so that we don't forget what's going on, seeing that our stupid fucking crappy thing has decided not to work because the market's closed or something. So we've gone plus, what was the first one? 280. Now we've gone minus 70. Let's see what happens next. Now that wasn't a buy because we haven't gone below 20 on the stock. So we're going to wait. Now we're looking at the stock, didn't go below, okay, it's gone below. So we can look for a long here. Didn't quite get above the Bollinger Bands there. Now, technically all our rules are met here, but 2 things, and again, we've noticed that we can add, because we're manually trading, we can be a little bit sensible about our rules or even refine them a little bit. That breakdown below the 20 was quite a while ago, like a day ago. And for a day it's been rising, but the price hasn't really been rising. The Bollinger Bands have been pretty flat. This is a trade that even in this test you would say, nah, the conditions have gone. The drop below in the stochastic was too long ago. That's not a trade we're going to take. As always, better out than in. Because remember we said the last trade, we just had a good win. Do we really want to jump back on the other side of this straight away? And we said, yeah, we will for this test. Live, you could say, just had a good win. Yeah, that was a strong move. I'm just going to sit this out, wait for the next one. But it was a valid signal. So, and you might have also said there was a little bit of a Bollinger squeeze there. So the volatility was too low. Hence, and I said it at the start, when the volatility is low, we want to not trade. But we took it, and that's what happens. Because that's why we're doing it forward, because we don't know what the future's going to hold. So we're not going to take this one, and we'll run it forward again. Okay. Run it forward again. Okay, so if in this next run forward, no. So here the red was still above the blue when the Bollinger Band got broken, so we didn't enter. And now it's not gone below, so we'll carry on. Our stochastic didn't get below, so we wait. We're still waiting. Okay, yeah, stochastic has gone above. So now we're looking for a short, but it looks like the market's going up, so we mightn't get one. So let's wait and see what happens. Up it goes, up it goes, up it goes, up it goes, up it goes. It's a bit of a shame, isn't it? Alright, so let's have a look. Nope, didn't break. It's too far along now. We've got to wait for a reset. Okay, now we're looking for a long because the stochastic has gone below 20. Okay, we got one. Now, when we're looking at this looks like it could have been a news announcement, given the time. It looks like it was a it could very well have been some sort of US news announcement. Technically, it mightn't meet our rules because at the point here, red is still below blue. But we've seen the news, we've seen the strong reaction to the news, we've seen our stochastic go from bottom to top, and the red is pretty much almost above the blue. We can use a little bit of smarts and say, let's take that when it broke. So we would have taken it when it broke there at the beginning of this bar here. So let's see if it was a good trade. Still in. Okay, so now we've got one of our exits happening. We've got our stock above 80. So one exit has clicked. And there we go. Our Bollinger Band was broken. So our Bollinger Band was broken, so we exited the next bar. So I think this is roughly about a break-even trade. Let's have a look. Where did we enter again? Here. And from here to there. So we made 16 pips, basically break even. And again, these aren't gospel figures, so we'll say it was 10. But effectively a break even. So onwards we go. Okay, so we're looking for a sell because the stock is above 80. Okay. Red isn't quite below. Is now. So it was on this bar, so we enter on this one. Let's see where we go. Okay, so one of our exits is met, the stock. And then there we go, the red is above, so that's our exit. So we missed the thing, we entered, no, up here wasn't it? We entered here, and we exited here. So that was 54 pips. Now, we could have said down here that we were going to exit, but it might have fallen further. And the first time it came up and it came back down, we might have exited there. And we haven't even been looking at support and resistance. I've got way ahead of myself. So we've been ignoring support and resistance. So that's 56. We'll add 56 onto our thing. But let's have a look. If we were a bit smarter and not a dumb shit like me that forgot about it, we can see here that we've got a resistance. And then we saw a double bottom here, and then we had a strong bounce off it here. So really we should have been using our brains. And when you're sitting here for hours, because each one of these bars is an hour, rather than click, 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 make the next trade happen for the sake of a video, we might have noticed this and not been so stupid. After the first bounce off the resistance, we might have exited at the second test of the resistance. But we didn't, because I'm dumb and we recorded where we ended up. So that's fair enough. Let's delete that line. Do you want me to keep going, or you're sick of it? We can keep going if you want. But this is the test. So this is how we find out if these random indicators that we have actually make a good system. We can test it. Alright, so we've gone down below again. So we're looking for a long. But the market is going quite down at the moment. Alright, so we might get one here. Let's have a look. Now last time we had this, we faked ourselves out because we forgot about the Bollinger squeeze. This time we'll think, hang on, do we want to enter this? We've got all three of our rules technically have been met. When did it come up? The start of the Asian session. Now, do we want to take the trade because of low volatility? We don't have volatility in our rules, so let's just take it to see what happens. But this is how you can refine your system, and by doing this test you start to realize these things. I shouldn't trade just after Asia, or I shouldn't trade if the Bollinger Bands are squeezing in, or I shouldn't trade if the stochastic came up from under 20 more than 4 hours ago. These are the rules that you can develop by testing it. So you start off with these general rules, and then you start to notice where the bad trades come from, and then you can refine your rules down and get better and better rules that, sure, you might lose some good trades, but you also eliminate the bad ones, and that's the key thing. Yeah, Tiffany, take notes, because you're not going to remember. When this FX Blue trader does work properly, which I think it's because the market's closed, it's not getting any ticks through, it records all your trades so that you can see your equity chart and things. But yeah, take notes. Like, pen and paper is always good. You can just note down and why the trade went bad. It was a Bollinger squeeze, and you keep noticing all your bad trades came when there was a squeeze. So you know that if you see a trade when the bars are squeezed in tight, then you know. Oh, these are all, this is just a system that I made up today, so I don't know what the rules are. I'm making them up as I go along, which is the purpose of the video, is to see how we make a system. And it seems like it's a relatively good system, but the rules can be refined a little bit more, which is why we're doing this, and why testing it when you can't see the data is important, because you make a decision as if you're seeing it in real time. And the mistakes that you make are the same ones that you might make in real life, and you can see what caused them. So even in this little time that we've been going, we've seen, maybe we should pay more attention to the Bollinger squeeze. We've forgotten support and resistance. Remember support and resistance. How silly is that? I don't do pyramid entries. You enter or you exit. I mean, not to say that there's not good reasons for it, but I enter on one trade on indicators and exit on indicators. So you could put in an emergency stop loss, but I always want to trade to enter and exit on indicators. Dave, 6th of Feb. Let's find the 6th of Feb for you. 6th of Feb. Okay, so that's this one here. What are you asking me? Stock was below 20, but at the same time, red crosses blue, stock is now above 20. Well, I'm talking a manual trader, and in computing anything that you can comprehend with rules, you can code in. So you could say if stock was, call the stock values of the past 6 hours, 8 hours. If a value was below 20, then condition is true. But we're just experimenting here, trying to figure out what the best way it is to trade this. We might find that over the course of time that we can assign an actual value to that. So it's gone below 20, is rising, and is still below 50. It mightn't be a time limit, so many hours ago it happened. It might be a value. These are all things that you can discover by doing the test. Because like I said, I didn't know that this was going to work. I hoped it would work so I didn't look like a complete doofus. So there you go. That's probably why we wouldn't have taken along, is because it's still range bound because we had the squeeze. So there we've refined it a little bit. So back here we can add in plus, support, and resistance, you stupid wombat person. So I completely forgot about it, and we threw away a stack of pips on that last trade because of it. So our Bollinger Band broke into the upside and isn't in a squeeze. So already we've added a little improvement to our system. So we'll do a couple more, but you generally get the idea. Like this would just be doing more of the same. Okay, so our stock's above, so we're looking for a short. And I mean, we could have gone long before and gone, yay, we made it right. But it wasn't a good trade. Alright, so okay, so we would have got faked out here, I think. And again, that looks like a big news announcement, or a couple of them. So we might have just looked at the thing and said, oh, one news announcement might have been French production and it's poor or good, I don't know, and it dropped. But then 2 hours later was American gross domestic product. That would be a good time to sit out, because the market's not going to be predictable. News just flicks stuff on a dime. So we would have entered here on this long bar to the downside. So we would have entered down here, and likely we're going to lose money. There. So we would have lost money on that one. If we weren't paying attention to the news, we would have lost 140 pips if we left it go. I mean, we could also have a rule that if we enter, we set our stop loss at the opposite Bollinger Band. So we could have set our stop loss somewhere here, and as well it was just past the nearest high. That could have saved us a lot of losses, but that wasn't in our rules. So again, it's just, we can develop these things by forward trading and not knowing what the future's happening. So we can't be absolutely perfect in knowing what the market is doing. This is like an actual true test. So we lost 140 pips there. But again, we could have, if we had refined our rules a bit and were a bit smarter, we might have gotten away with not losing quite so much. We still would have lost, but we would have lost less. Or perhaps we would have set it out because the news was there. Looks like news, but I don't know. So again, we're still looking for a short because our stochastic is high. Alright, so we've got a short here. Let's see how this one goes. I'll put a little marker in so that I can remember where it was. It was here. That one. Okay, so our stochastic is below, so we've got one signal exit. Down we go still. Down we go still. Down we go still. Okay. We've gone from up here. Here. Where are we? 123. And again, we didn't look at support and resistance. I need to get better at this shit, don't I? So we've got a point there. I don't know if the previous... Bring it back. Ah, yeah, that's not really a support and resistance, I suppose. I suppose you could say top of here, below there, but really, nah. It's not something that we really missed. Where are we? Bring us back, chart. So what did we say it was? I forget. From here to there, which was 125 pips. We'll go to the end of the month. We'll go to the end of February, and then we can then tally up what would have happened on this over the course of the month without even refining the rules. So along we go, along we go, along we go. Okay, so we've gone down, stock's gone down below 20, so we're looking for a long. Still looking for a long. Okay. There, we would have had our long. Maybe not. I mean, again, this was news. And you could be like, oh, fuck, this is taken off above the Bollinger Band. I'm getting in on this shit because blue and red are on the same line. Stock's coming up. Spoken the Bollinger Band. I'm in on this shit. But let's say we went at the end of the bar so that we're not like overestimating our pips, which we haven't done all the way through. We did it at the end of that long bar. Okay, we got one exit, which is our stock going high, and then we got a break below here. So we went from this point at the end of the news. If we didn't jump in at the news, then we went to here, which was 36. And again, we forgot support and resistance. We had support and resistance up here that if we would have got near on 80 pips if we paid attention to it, which again I forgot to because I'm a fucking idiot. So 32, and that takes us to all the trades for the month. So if we add them up, we'll call it a day here because everyone is probably sick and tired of hearing me talk. So 293 pips for the month, just on one pair. And again, when we went through it, we were seeing things that we could improve. We could not take trades on Bollinger squeezes. I kept forgetting about bloody support and resistance. How good a teacher am I that doesn't even follow his own rules? We entered a trade with big surrounding news. Judging by those candles, they look like news candles, and they were quite big ones and in opposite whipsaw directions, which cost us the 140 pips. So there was lots of things in there that that you can't say that we were cherry picking these trades to get the 293 pips. We were just using the simple rules. We refined them slightly, but as we go on, we can refine them more, get an idea about what's good, start again, retest it. And because we don't know what the future's holding, these are good tests. It's not looking at a chart and looking at the future and saying, oh, it's going up here, so therefore I would have made this huge big profit because the indicator way back here would have told me to. No, you're saying at this moment I'm making the decision, not knowing where the future holds. So that's why these training simulators are very good for both testing your system and also training. You can put, like we did a whole month then in half an hour, and that was me talking through everything as well. You can do it yourself quicker because you're not having to communicate what's going on. So hopefully everyone got something out of that. I will call it a day here, but before I do, I will answer any last questions you have, and I'll go back up here and have a look and see any on the way through. So if you've got any last questions about anything for the whole time, fire them away. I'll try to answer them, but I will call it a day in 10 minutes if we don't answer them before then, because you're probably all sick of me. Dave, the good thing with bots is you can try one thing, and if it doesn't work, you'll know because it's statistics. So do we try time, or do we try a value? So we could say if it's rising and below 50 still, we'll take a long, or if it's coming off -20 and rising within 6 hours, we'll take a long. You can code both of those in, test them, see which one's better. How can I tell it's news? Just experience. Like you can see in the lead up that the bars are going a certain way, and then it just goes kaboom in one direction, like takes off like a bloody cat on a hot tin roof. Those type of things, especially reversals, because we saw one that was the one that we lost money on back here somewhere, was definitely a news thing, because it went strong down one way, and then there was the bounce off that, so maybe the news got digested and it wasn't as bad as people first thought, but then the bar after it went shooting up again, which it could have been 9 o'clock Euro news, 10:30, this is my local time, 10:30 American news, up it goes. So that's why it's important to check your things and check your news calendars. And I always avoid trading around news because it's unpredictable. So we could see there that we thought it was going short, all our entries, all our rule entries were correct, and then boom, up it goes. So it just broke us. One way to break the rules is news, so avoid news. If you had to trade about at least 100 trades. Yes, that's very true, Tiffany. You don't want to overreact to something. So if you see one thing, make a note of it, so that then if you see it twice, 3 times, 4 times, you keep noticing the same thing, then it's going to be a problem. That's why bots are good, because you can notice something like that and then code it in, and then very quickly know statistically, should we avoid Bollinger Band squeezes, and you'll get your answer very quickly. But yeah, you don't want to overreact to one trade that was bad, because you can do everything right in this game and still lose. Yeah, Dave, that's pretty much the best way to do it. What you do is you look for multiple periods back. So say we're looking at the hour chart here, so you might say in the past 12 hours, where was the most recent lows made? And then you say in the past 24 hours, where were the past lows made? In the past 3 days, in the past week, and then you get a tally of them, and then you can see if the same numbers are coming up in general terms, and that's how a computer can see it. Google up the various support and resistance indicators, because people have tried to code it, and it's probably one of the harder things to code is support and resistance, because of that thing. Humans are the best at doing support and resistance. Anyway, that looks like everyone's run out of questions, so I hope I was pretty clear, and I hope you got something from it. Again, I'm not saying this system is the system that's fantastical, the one to use. I literally just made it up and threw it on the chart. But you can see that when you have the 4 ingredients, the trend, the momentum, the volatility, which is your Bollinger squeeze that we kept ignoring, and support and resistance, which I kept ignoring in the forward test, you can see what the market's doing and you can predict it. No, I'm not using any non-standard indicators. This was a clean install of MT4. I was using Bollinger Bands, what was I using? Stochastic oscillator, and the 2 middle lines in the Ichimoku cloud. That was it. They're all stock bog standard indicators, no fancy ones at all. We just could understand what story they were telling the market. The trend was telling us if it was up or down. The Bollinger Bands were telling us if something interesting had happened in the market. So if the price had moved, had pushed off in a particular direction. The stochastic was telling us if the market had put in a lot of effort, so that therefore we thought that it needed to go the other way. And then support and resistance can also help us. So we put all those together to get a picture of the market and make our rules. And then when we entered on all 4 conditions. So we had 3. So we entered on all 3, which again we kept forgetting support and resistance, which was a bit bad, but we entered on the 3. When we came time to exit, we exited on any 2 out of the 3, and usually it was stock that was one of them. So it was stock plus break the Bollinger Band again, or the Ichi trends crossed. The testing program, I'll do up the notes that I made in that document as I was going through. I'll just format them up a bit and I'll post them up in the next 12 hours or so that people can have that document when they're re-watching this video. But it's FX Blue and it's trading simulator for MetaTrader 4. I'm sure there's other programs and trading systems that have the back test of your system's ability, but it's really good because rather than just putting an indicator on and seeing the future when you're trying to make your decisions, you are trading as you would live, but you get to do it a lot quicker. Those were our charts, and we could go click, click, click through. Anyway, I'm really humbled that everyone turned up, so that's great. And hopefully, you pass on this if you think it was worthwhile. You pass this on to other people so that they can watch it too, because there's no need to pay shit cunts money for information. You saw today how simple it was for us to do this. There was no tricks. There was no you have to be an expert. There was no secrets the banks didn't want you to see. We just picked bog standard indicators, used a sensible structure to explain what the market was doing. We came up with rules after observing. We came up with entry and exit rules based on indicators rather than just picking a random amount of pips. And then finally, we tested it by not knowing the future. So thanks everyone for turning up. It was a pleasure, and hopefully I'll be able to think up something else to talk to you guys about in the future, because maybe I don't have to, and you'll all be hugely rich by making these fantastic systems. So good luck to you all, and thanks for joining me, and I'll see you when I'm talking to you on the internets. See you all. Ciao.